Hey, welcome. You ever look at the price of gas, or your favorite snack, or pretty much anything and wonder, why is it never the same price twice? It can feel totally random, right? But it's not. There's actually a hidden engine driving all those changes. And today, we're going to pop the hood and see exactly how it works. So, yeah, this is the big question. Why are prices always moving? It's something you got to wonder about, whether you're watching the stock market or just buying groceries for the week. Well, we're going to solve this puzzle together, and it's actually simpler than you think. All right, the first and honestly the most important piece of this whole puzzle is a little something called supply and demand. You've probably heard the term, but this is it. This is the absolute core rule, the engine that's behind every single price you see, period. Look, the logic here is incredibly simple. It's almost beautiful. Just picture a giant scale. On one side, you've got all the people who want to buy something. On the other, you've got everyone trying to sell it. If more people are buying than selling, whoosh, the price has to go up to find a balance. And if more people are trying to sell, well, the price has to drop to get buyers interested. That's it. So, to put it formally, supply is just how much of something is out there. And demand, that's how many people actually want to buy it. The price is just the result of this constant tug of war between the two. So if demand is super high but supply is low, yeah, the price is going to go through the roof. And if there's tons of supply but nobody really wants it, the price plummets. It's a simple, powerful idea that applies to literally everything. Okay, so if it was just that simple, we'd all be amazing at predicting prices, right? But we're not. And that's because there's this other incredibly powerful force that can come in and just completely change the game in a split second. And that's what we're going to call the news factor. This is how all the stuff happening in the outside world, big events, major announcements, all of it, leaks into the market and directly messes with the decisions of buyers and sellers. And a lot of the time, it's driven by emotion. And when I say news, I don't just mean what's on the nightly report. No, news is any new piece of information that can change how people feel about something. Think about it. A big change in the economy, a company announcing amazing or terrible profits, a game-changing new product hitting the shelves, or some major global event. All of that is news that can make people either rush to buy or scramble to sell. Now, theory is one thing, but let's actually see how these two forces, that basic supply and demand and this wild card news factor, smash into each other in the real world. We're going to run a little test case with a product I'm pretty sure we all know very, very well. Let's talk about the launch of a brand new iPhone. I mean, this is the classic example of a massive, super positive news event, right? So we're going to look at what you'd expect to happen versus what history actually shows us. So just picture it for a second. The big day is here. Apple gets on stage, they announce the shiny new iPhone. It's got all these incredible features, everyone's buzzing, the media's going crazy. What's your gut instinct? What happens to Apple's stock price in that moment? I bet your brain goes straight here. It's amazing news. Millions of people are going to line up to buy this phone. Demand is about to go ballistic. So naturally, the stock price has to go up. It seems like the most obvious logical thing in the world. But this is where it gets interesting. Because if you actually go back and look at the stock charts from past iPhone launch days, a really weird and frankly counterintuitive pattern starts to show up. The reality is often the complete opposite of what we expect. And here's the shocker. A lot of the time, Apple's stock price actually goes down on the day of the big announcement. So, what on earth is going on here? How can unbelievably good news actually lead to the price dropping? This is the secret right here. The market doesn't just wake up on launch day. See, that news factor has been busy for months. Everyone, investors, analysts, the public, they've all been talking about it, guessing the features and buying the stock based on that expectation. So by the time the official launch happens, all that good news is already priced in. The event itself just becomes the moment for people to say, okay, time to sell and take their profits, which makes the price dip. So what you just learned isn't just some fun trivia. It's like a new lens. It's a whole new way of looking at any price, for a stock, for a house, for anything, and actually understanding the deep, hidden forces that are making it move. Let's just boil it all down into a super simple two-step checklist. First, always look at the basic supply and demand. Is there more pressure to buy or sell right now? But then, step 2, and this is the game changer, ask yourself, what news is already out there? What is everyone expecting to happen? That's where the real story is. And that's really it.
This isn't about predicting the future with a crystal ball. It's just about understanding this dance between raw supply and demand and the incredible power of human expectation, that news factor. You now have that fundamental tool in your toolkit.
So the next time you see a price jump up or crash down, you won't just see a number changing on a screen. You'll be able to ask the right questions. You know how it works now. So the real question is, what will you watch for next to understand the why?